Welcome again to another session of market analysis for today, June 10th, 2024. I'm Giovanni Betancourt, analyst, trader, and educator with Vantage Markets, and it is being recorded previously to the open of the U.S. session. Well, Friday we had, after Friday's jobs report, shocker, it's hard to imagine a bigger event than Federal Reserve Chairman Jerome Powell's press conference on Wednesday for shaping the outlook for investors for the rest of the year. The stronger than expected number of non-farm payrolls added in May, combined with higher hourly earnings, was enough to push up both 2-year and 10-year Treasury yields by about 0.2 points each, almost equivalent to a quarter-point Fed hike. Stocks edged down a little, but not too much. That suggests that even though the Fed may have less room for maneuver to ease borrowing costs, gains from artificial intelligence may still be able to prop up shares. Earnings from Oracle, Broadcom, and Adobe this week will add to that picture. Apple's Worldwide Developers Conference, where the iPhone maker is expected to map out plans for AI on its devices, is also one to watch. Unfortunately for investors, Powell is probably as puzzled as they are about the economy. His message so far this year has been consistent. He thinks rate cuts are coming, just not yet. Economic growth is cooling, just not that much. Inflation rates are still likely to come down, but it will be nice to see more hard evidence that is happening. The consumer price index data on Wednesday are the next piece of the puzzle. In any case, the Fed's dot plot, which maps out how policymakers see interest rates moving over the coming months, and is also due to be updated Wednesday, may well show fewer reductions are expected than previously. Market put the odds of the first cut coming before the November election about 60%, compared with about 75% a month ago. With stocks markets still close to record highs, everyone is wondering if a turning point is coming, something that might send stocks even higher or back down. If he wants to, Powell provided. Now, let's take a look at what we can speculate, because that's what our job is. We're speculators for today's market sessions. So we have in front of us the Nasdaq. Okay, we are in a daily Japanese candlestick chart, and so as you see, on Friday we did have that nice fluctuation to the upside, but it quickly retreated. And we kind of closed in the red, but it didn't drop that much. We didn't even come down towards the half of the of the Wednesday's trading session. So that also could be a scenario where we could bring up our level of support right around that area. Okay, I'm gonna leave my resistance where it's at. Okay, so right now we're flattish. Okay, we basically is flat. Anything that could bring any more fluctuation or any more volatility, obviously, like I said, we'll see on Wednesday. The CPI is gonna be coming out, so keep that in mind. So right now, I will be just setting aside on the indices just for now, just to see how that they open. As far as the S&P goes, the same kind of token, the S&P, they kind of pick the head up above our resistance, so we're going to raise that puppy a bit, just to the top of that, and bring up our support also right around the 5,300 psychological round number. So still out of it. The Dow, okay, well, the Dow also had a more of a wider fluctuation, so I'm going to bring down my resistance to that level. I'm going to leave my support where it's at. So let's see what will happen today. Crude oil. Well, crude oil, after so many information coming out of it, I'm looking at it being bullish. $78 is going to be that resistance level for the week. It was previously a great level of support, as you can see in the previous weeks. So now that builds or turns into a resistance level. So let's see by Friday or by even Wednesday, we'll be at 78. I'm going to leave it at 74, my support. Nat Gas. All right, so Nat Gas has opened with a strong gap up. So let's bring our resistance to $3.10, and let's bring up our support to $2.70. So our RSI is about to enter. Actually, it's already peaking inside the overbought territory. So perhaps $3 will be a level where it will do a correction, a small correction, or just a small pullback, a retracement, and then let's see what will happen. But still being long. All right, so gold, after Friday's number, gold took a beating. Obviously, that was a big number. So gold took a beating. I'm speculating that it will recover. So initially, the intraday resistance level for it will be 2,210, which is this level of support that it was creating last week. So that's where I'm looking at it for it to come up to. So being bullish with gold. Silver also looking to recover itself. So let's see if at least again comes up to around $30. Sorry about that. So let's bring down our resistance. Copper. Well, copper. Still, let's see if it'll do some more momentum to the upside. After on Friday it did kind of bumped out. So let's see if it'll recover itself today and we'll go back up to $4.70. I think it will. So Bitcoin. Well, Bitcoin is flattish. It is just trading sideways for the last few days. So another scenario for it, for a possible breakout to the upside. So keep that in mind. The euro, whoa, it opened with a strong gap down. That is going to have to bring our support to 107 and our resistance to 108. So let's see what will happen. Will it continue? Will the market come and close that gap and then continue its path down, or will it recover, or will it just continue to trade lower? Let's see what will happen. The pound didn't have that effect. It was likely also because of last week's ECB rate cut. That was just expected. So let's see what will happen. And then the dollar index, okay, open up with a gap up. So 105. Let's just bring up our support to our 104,300. And let's see, okay, it opened with a gap up. So let's if it continues to move higher, we'll see a continuation to the downside, most likely on the euro. So keep that in mind. All right, thank you for watching, and I'll see you tomorrow.